Hello everyone. In this video, we will be discussing bank reconciliations as part of our content in Chapter 7. And specifically, we're going to be going over an example. It will be question 4 in the end of chapter practice. So in this example, we are given some information for a crane company, and we need to prepare a bank reconciliation for the month of July. And a bank reconciliation is prepared each month by a company. And we always start off with their cash balance per the bank statement because most of the transactions that have been recorded during the month are going to be reflected in the bank statement. However, at the end of the period, we might have a slightly different number for our correct cash balance, and that is due to reconciling items. And reconciling items typically occur due to timing differences when we're trying to take the cash balance from the bank statement and get to the correct cash balance. So that will be the first part of the reconciliation. The second part of the reconciliation involves us taking the balance from the company's books or their general ledger, and we need to figure out if there are some journal entries that have not been recorded or incorrectly recorded during the period. And we need to make some adjusting journal entries and do this bank reconciliation to get to the correct cash balance. And both sides of our bank reconciliation will agree to each other. So at the end, we'll have the correct cash balance, which we'll use for the balance sheet. So let's get started. The first piece of information that we have in this problem is we have the cash balance per bank. So that's the very first thing that we have in this problem. We have our cash balance per bank. So the first part of our bank reconciliation actually starts off with our cash balance per bank statement. And the goal here is to get to the adjusted or the corrected cash balance per bank. So we need to identify which of these items are going to affect the cash balance per bank. So the first thing that we have here is we have this balance that we want to include. So whatever number you have in your problem, you want to make sure that you include that right here. You also want to make sure that you write down that our bank reconciliation is for the period that ends on the specific date. So the bank reconciliation is prepared as of July 31st because during the period your balance fluctuates. So you want to know on July 31st, at the end of the day, what is the correct cash balance. So one thing that I want to keep in mind is that this bank statement, let's say that it was prepared as of July 31st at 6 o'clock p.m., which is when that bank closed. So let's say that the bank closed at 6 o'clock. So that was the time period for which this reconciliation was prepared as, or the bank statement was prepared as of. So your reconciliation is going to include all of the transactions that happened on July 31st. But until like the very end of the day, so let's say 11:59 p.m., every single thing that has happened needs to be reflected in this reconciliation. So one of the things that we see here in the second line is the July bank service charge was not recorded by the depositor. So that means that this bank service charge was not recorded by the company. The company is referred to as the depositor. So this bank service charge needs to be recorded. In the company's records. So we're going to save this for the second part of our reconciliation. The other piece of information that we're given here is the cash balance per books. On July 31st is $7,974 in this example. So this cash balance per books, I'm going to save this for the second part of the reconciliation because it affects per books. Next, we have deposits in transit. So deposits in transit are those items that have been deposited into the ATM, but maybe they got deposited after 6 p.m., so they're not reflected in this bank statement yet, but they were in transit as of July 31st. So let's say that you're a restaurant and you close at 9 o'clock p.m. on July 31st. Well, someone's going to go ahead and close up the shop, count up all of the cash, and if you realize that you don't need to have as much cash in your register for the next day or in a safe for the next day, then you want to go ahead and make a deposit. So maybe that deposit happens at 10 o'clock p.m. Well, 10 o'clock p.m. is still on July 31st, so we want to make sure that we record this deposit in transit as a reconciling item, and we're going to add the deposit in transit. So we're going to include the deposits in transit. We're going to add this amount into our bank reconciliation. So you can go ahead and input that amount right here, deposits in transit. Make sure that you're going to add the deposits in transit because that money was put into the ATM before the end of the day. Next, on number 5, we have a dollar amount that was collected for Crane Company in July by the bank by electronic funds transfer. So that means that a customer or a third party, they sent money electronically to the bank account. So a good example of that could be bill pay, or it could be a service such as PayPal or Zelle that is used for electronic funds transfer. This is also referred to as like a wire transfer as well. And basically this money is collected. So that means that we need to add that money into our records. Because it's already been collected by the bank, it does not affect this first part of our reconciliation. It only affects our records. So we're going to go ahead and make a quick note that this amount that was collected by the bank has not been recorded. So we need to record electronic funds transfer. And we're going to save this for the next part of our reconciliation. All right. The next thing that we see here is our outstanding checks. So those are checks that have been written by the company to employers or to vendors and suppliers for payment. And we have written that check, so technically that money doesn't belong to us anymore. The employer or employee, actually in this case, the employee has a right to go to the bank and collect that money, or the vendor or supplier has the right to go to the bank or deposit the check and collect that money. So since that money technically doesn't belong to us anymore, there's just a timing difference between when they actually try to deposit that check. We're going to subtract this amount in our reconciliation. So this outstanding check is going to be subtracted. And after you've gone through this part, you're going to take your cash balance per bank. You're going to add the deposits in transit. Then you'll have a subtotal. You're going to subtract out the outstanding checks to get to your adjusted cash balance per bank. The next part of the reconciliation adjusts the cash balance per books. So for our cash balance per books, I'm going to need to erase a couple of these notations right here. We're going to start off with the amount given to us in our problem. So that was $7,974. Then we're going to add in that electronic funds transfer. Okay, so we're going to add in this electronic funds transfer of $2,626 because this is money that is received and we did not record it yet, so we need to go ahead and record this. And for this item, we're going to be recording an adjusting journal entry. So keep that in mind. We need to record a debit to cash because we received money, and we're going to credit our accounts receivable because we don't want to follow up with our customer or whoever we're collecting money from for that amount. Okay. Then we also were given in our data the bank service charge. So we need to subtract out that bank service charge. And because we haven't recorded this yet, anytime you're going to have a charge, that means that you've paid for something. So that's going to be a credit to cash. And you're going to debit the bank service charge expense. And once you do this part of the reconciliation, you're going to notice that you take your cash balance per bank, add the electronic funds transfer received to get a subtotal, subtract out the bank service charge, and then your adjusted cash balance per books. These two amounts are exactly the same. And basically a company has to keep doing this bank reconciliation until they get the exact same dollar amount for the adjusted cash balance per bank and the adjusted cash balance per books. And this is an area where companies really strive to be exact. They don't want to have an estimate. They don't want to be off by a couple of dollars because they could have some items that they're missing that would be affected in one way or another way. And if you're off by a couple of dollars, maybe these two things cancel out, but then there could be some balance sheet and income statement impact if you're missing some transactions or if you have some transactions recorded incorrectly. So we're going to go ahead and start recording these two journal entries. So the journal entries only happen on the cash balance per books. So that's the only place where you need to have the journal entries. You don't need to do any journal entries on your cash balance when you start off with the bank statement. So these two journal entries are going to be for the electronic funds transfer and this bank service charge. So the first one is a debit to cash and a credit to accounts receivable to record the electronic funds transfer received by bank. The second one is a debit to the bank charges expense. You always want to look in Wiley at the list of accounts so that way you can choose the appropriate account title. Each company might use slightly different titles. This might be called service charge expense or bank service charge expense or bank charges expense. There could be a variation in wording, so you always want to look at what Wiley has for that particular example, and you're going to have a credit to your cash account. And right here, this is the list of accounts I'm referring to. So in every Wiley problem, you always want to refer back to this list. So here you can see that this company uses accounts receivable and uses bank charges expense because you don't see any similar account title. So thank you for taking the time to watch this video. Please make sure you practice bank reconciliations as much as you can before the upcoming quiz and exam.